Hello traders, and welcome to another weekend's market forecast video. Starting off with the dollar index as we usually do. This week ahead we are going to have some volatile movements due to the CPI and FOMC on Wednesday. Already we started a move with NFP on Friday. So starting with the dollar index, what we can see is that it's doing a corrective bounce to correct this decline from the 16th of April. And this is a complex sideways bounce in the dollar index before we will get another reaction to the downside. So beginning of the week, we can expect some pullback to begin the week with, some small pullback. Another push-up is likely. And if this is completed before CPI or FOMC on Wednesday, then those events will trigger the sell and the reaction lower to the dollar index once more. And this is going to be our bias for the upcoming week for the dollar index. We are overall expecting more downside since the peak of 16th of April. So any bounce here, it's an opportunity for another sell in the dollar. For the dollar again, we have seen the reaction lower over the last week or so as we have been expecting, and then we have bounced again higher over here. So as far as we stay above these peaks over here at the 157,500 area, dollar yen is also still tilted to the downside, and we will remain our bearish bias for a double correction since the peak of 29th of April, something like this. Before we get the reaction higher later on, we will remain with this bias as far as we are below this peak. For our traders, we don't recommend selling this one. We want to see how it should develop, and we have explained how we can trade it later on if it gives us what we want. So for the time being, we are still bearish in the dollar yen as far as we are below this peak over here, and for us at this stage is a 50-50 scenario whether we will sell from here or whether we are going to do another move higher before we drop. So either way, the dollar yen can see more reaction lower because the dollar index is also still biased to the downside overall. For the euro dollar, we have seen this declined over Friday due to NFP over here. Overall, we can see that as a corrective structure before another push to the upside in the euro dollar. Alternatively, if it wants to break below the 30th of May bottom over here, it will do a bounce for another small move lower, and then it should react to the upside again for another cycle higher, the euro dollar. So we are still biased to the upside, but as of now, it doesn't give any valid buying opportunities for our system and our traders. So for us, we are going to stay away from the euro dollar as we have mentioned previously. Overall, we can see that this is the corrective structure that is taking place for another push to the upside to come. It doesn't need to break the low from the 30th of May, but it is possible that if it wants, it can do that, bounce, break the lows a little bit, and then react to the upside. So this is going to be our view for the euro dollar for the coming week. So as we said, for us, it's not really worth trading right now. If you want to figure out if this will turn out to be a possible trade setup, feel free to join us with the link in the description, and you will have access if you join the premium membership to join our live sessions between Monday and Thursday as we cover the market in a daily basis, and then you will understand how we like to trade and when we avoid trading. So feel free to do that, and we are more than happy to help you to determine if this is going to be a valid setup for buying the euro dollar. For the pound dollar, we are still trapped within this corrective running flat as of right now. It's also still biased to the upside for the pound dollar. For us, we don't like to buy from these areas. We have provided to members this buying area and this one over here. For the time being, we don't like to trade this one. We can see that it doesn't need to make new lows. Alternatively, if it wants to, it can do that like the euro dollar before it reacts to the upside. But either of the cases, we don't really like trade it right now. And but still we are still biased for more upside, so we do not really recommend selling this pair at the moment. It still has more room for upside for the time being. For the pound yen, we have been biased to the downside from these levels for a corrective structure. As of right now, the market is in the middle, so it's not clear whether it wants to continue lower or alternatively it can even make another high before a reaction. So that's why we do not really recommend trading it right now. If it gives us the next move lower, it will provide an opportunity for a counter trade later on. If you want to know the levels again and how we look at the market and decide what to trade and what not to, feel free to join us with the link in the description through BMC. And we recommend you the premium plan if you want to be updated on a daily basis with our live sessions and understand how the market moves and which areas are for possible reactions and which ones they are not. So in this way, you increase your possibilities to get in the right side of the market for a decent reaction and avoid guessing in the middle of a cycle. For the EURUSD is doing a double correction from this extension area over here, and very soon it will find another area of possible reaction. And then we are biased from the downside from this area over here, which we can expect selling pressure to arrive again in the market. And ideally for this one, break the lows from 20th of May, 17th of May over here for more downside overall. So this will be the area that we can expect to see a reaction in the EURUSD to the downside. Now for gold we have got a reaction higher and then the market turned lower again. This is why we have been explaining to the members as well and to you here on YouTube for free that we don't really like to buy gold at these areas. The buying zone was this one for this move to the upside. And the risks were that we are in a complex corrective structure from these levels, and this is what is going on at the moment. Of course, if you want to figure out what is the structure and why it's happening, feel free to join us so we can explain it to you in the member area. So what is going on right now is that the market is trying to confuse the majority of traders. What we can see overall in the market is a potential reaction to the upside. We can begin the week with a small bounce and then another low, it's possible. Or alternatively, we can be consolidating here for Monday, Tuesday, and then from Wednesday, we will see the reaction to the upside. And the overall bias is still to the upside for gold. And from there, we will see what the market wants to do. It can get into a bigger corrective structure overall for the time being. For oil, what we can say, we have been saying from these levels that we have been expecting this decline to take place. Even from here, we explained this bounce for another move to the downside. So what we can see ahead for oil is more downside. We can get a small move to the downside for another bounce before we sell still lower. And the overall bias remains to the downside for the short-term cycle from the 5th of April. And ideally, we might see new lows below these ones over here from December. So this remains to be seen, but for the time being, the opportunity was these levels to these levels, and now the market is getting more choppy. So still more downside is expected, but the value of the trade is starting to decline because this was the area of sellers, and right now you are at the 75 area down from the 87. So of course, if you are looking to trade at these areas, it's becoming less valuable and more risky. And this is why you need to learn how to trade correctly, and you can feel free to join us with the link in the description so we can show you and teach you when to wait and when to trade the market and why, so you can understand how the bigger market areas react in your favor in the long term. For Bitcoin, as we have been explaining, we are expecting new all-time highs. The market attempted to do that and then it pulled back on Friday with the NFP as well. So what we can see here in Bitcoin, it's a possible either we will trade higher from here in a parabolic move higher, or we are going to see another possible drop like that, take the liquidity below these lows, and then the market will run up to new all-time highs. this could be a possibility, but as you know, we do not really recommend anyone to do day trading on Bitcoin and crypto. It's very risky and volatile, so you are better off knowing when to invest and why. And there are even more cryptos you can actually invest. You need to understand the nature and the timing of each cycle. And if you are interested in that, again, feel free to join us with the link in the description. If you have any questions, send us an email at support@roiforecast.com and we'll get back to you within the day. For the indices, S&P, SPX cash index over here, 500. We have explained this on previous weekend's market forecast that we expected new all-time highs. We got them on Friday. So what we can expect next, possibly a small pullback here for another push to the upside. We can overall still see more upside in the SPX before we get another reaction or a pullback. So expect the market to remain supported, but of course, now is not the time to enter new positions because the buys were from here, then from here. So all of the trades have been reacted to the upside as we expected. So this is not really the time for new trades. If somebody was buying from here or from here, now the position is risk-free, partial profits, and the trade is running for bigger possible profits overall. So we can still see more upside in the S&P 500 index for the next week ahead. And concluding our weekly forecast, as you know, with two of the ETFs, the 3Qs and the GDX. 3Qs over here, we have expected the move to the upside as we have said for new all-time highs. We are now experiencing a small pullback over here, something like that, and then the market should still turn up to the upside for new all-time highs once more. Before we can expect any short-term possible pullbacks or reactions, is still going to see more upside overall. And the GDX, the gold miners ETF over here, which is also following most of the time the price action of gold, as you know. It saw the decline on Friday, and this is a corrective pullback over here overall for more upside to come. In the short term, we might see a small bounce for another push to the downside like that before we turn to the upside. But regardless of the case, we are biased to the upside as far as we stay above these lows from 31.90 to target the 39 and 40 area higher for the time being. So thank you so much for watching this video. If you are new here, leave us a like and subscribe. Don't forget to turn on your notifications so you will be notified as soon as we upload any new video. And we will see you most probably on Wednesday with a midweek video. And enjoy the rest of your weekend and take care and trade safe. If, again, you are interested in our service, feel free to check us with the link in the description. With the premium plan, you get 4 daily live sessions on a weekly basis, Monday to Thursday, from 5 p.m. GMT. And also, you are going to receive between 1 and 5 trade recommendations on a monthly basis, depending on the month, of course. We are not a type of service that will give you daily signals or anything like that. We are professionals, so we are only going to give you the best setups we can see, and we will explain to you in detail how you can manage your trade and why. And at the same time, we focus a lot on quality over quantity, and this is showing to our results, which we have shared previously in one of the videos, and we are going to share a new update very soon as we finish with certain trades, and we are going to share it with you as well. So with that note, guys, enjoy the rest of your weekend, and we'll see you in the next video. Take care.